Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about Cathie Wood's positions, specifically the three stocks. She is down on the three largest positions that she's in the red. We'll be looking at these stocks in terms of seeing if we should buy them now or if we should buy them later or if we should buy them at all. So I hope you enjoy this video, but let's get into it. First off, Teladoc Health. We're looking at the 1-year chart. Let's zoom out a little bit. You can see since the beginning of COVID, this stock started to take off, and it's right back below where it was at that point. And you can see the the MACD is starting to look pretty dang good in terms of the price going up from here. But from the peak, Teladoc Health was 308. Right now it is right around 100, so down 66%. Let's see Cathie Wood's average buy cost, which we are using this cathiesarc.com website, which we talked about earlier. But we could see Teladoc Health with all of her holdings, all of her here we go, all of her ETFs combined. She has, where is it? The average buy cost of 148 to 172. Right, so we could see she has 4 positions, but her major one, which would be ARC, is 163.91. So 163.91, the price is at 102.05. We're getting it at a $60 discount compared to Cathie, which means her buy point would be right around here. That's where Cathie bought in, right? We're getting it right down here. But let's look and see if this is actually a good stock to buy. So let's have a couple points here. Let's mark these red. Oh wow, look at that. You can see the high from September 2018 is now the low just a couple days ago. And that's basically just proof that these trend line or support resistance lines, they do work. And that's pretty funny that we just saw that. And you can see it hit one time here and another time right over here where the stock jumped above it and started the day. You can see that's where the green candle started the day on it, and it rose ever since and is now only touching it. So we have 3 or just 2 major lines, right? This is Cathie Wood's position. I don't know, maybe like right here as well, because we see 1, 2, 3. But that's a little minor one. So here's where Cathie bought. Here's where we're buying right now, 102. The RSI is looking pretty dang good, where the RSI line is about to cross over and the momentum is starting to turn green. Of course, the MACD, the RSI is starting to climb up as well. It was below that 30 line, which is the buy zone. But we can see the recent price action on the stock from, let's just check out the 5-day chart. We can see exactly the stock is up 15% in 3 days. Just from this recent pullback and recovery in the overall larger market. Now, is Teladoc Health still worth buying is the question. In terms of the MACD and RSI, yes, it does look like it just is a good time to at least start a starting position. And that's where you buy a couple shares relative to your overall position of what you want it to be. Let's say you want to buy 100 shares of Teladoc Health at the end of the day, right? You could buy 10 or 15 here, right? See where it goes. If it falls more, you could load up more. If it doesn't, it keeps going up, then you could at least hold your start position. So that's what I'd recommend for Teladoc Health. The price looks pretty dang positive from here. It looks bullish just from the MACD crossover RSI and recent jump. But if the market dumps even more from here, the recovery stops, then we can see Teladoc Health under 100 again. And and that's the first time it's been under 100 since January 2020, before all this COVID madness started and Teladoc Health found its footing in the health market. So that's Teladoc Health. Now let's look into the other one, which would be Roku. For ARKK, it is at 267 average for combined. We can see Roku 267 to 275, so right around there. But Roku's not too far off of the average buy cost. Wow, look at that, up 18% today. So we can see some serious marks here and here or so, around there, and right here. So here's Roku, and right there. Since we got 1, 2, 3, 4 good zones there. So here's Roku. You can see a huge jump today, 18%, already up. It was 195, already up 30% from the recovery in 3 days. Pretty dang, that's a lot of percent, right? They're up 30% already. Let's see Cathie's buy zone, 267. And we're at 256, so it's not going to be too far off. There's where Cathie bought. So we're going to add a little discount compared to Cathie. Compared to the overall high of Roku, we're going to add a near 50% discount. But with this last day up 18%, it is looking mad expensive from just 5 days ago, right? We could see if any news came out. Pull this up. I don't know. What would the news be here? Here we go. Roku, so this is December 8th. Okay, so here's why the stock jumped. Roku signs multi-year extension with Google for YouTube and YouTube TV. So that's why the stock jumped. It's not just a pure technical, recovery jump. It's more of a news fundamental. So the stock could still be considered cheap from a couple days ago, just because this could have been a worry for the investors in Roku that they wouldn't sign its multi-year license with Google. But now that they have, the stock is fairly priced or even still cheap, and it could be worth buying. So same thing here. If you want some shares of Roku, you could buy a start position. You're getting it 46% off from the 52-week high anyways. And that's pretty good discount compared to some of the other stuff in the market right now. But yeah, that's the same thing with Roku. If you want to start a starting position in the stock, now would be a good time. But maybe just cut it a little bit, because 18% one day is still a huge jump, no matter the stock, no matter the news. So just watch out for a slight dip after this recent run up. Now let's look into the last position of the top 5 or so of Cathie's portfolio, and that's Zoom. Zoom is down quite a bit. Her average 337, now 194. Now let's see combined. So it's 337. Yeah, so 337, 335, very thin, very small difference. Now Zoom has broken past our recent support that we did chart before, and now we have some new support here. You can see backed by 1, 2, now 3 formally hit zones. And now that Zoom is in this range and it fell out of the range, let's see, it was 337, right? So let's mark this 337. So here's what Cathie bought, and we are getting it at a major discount compared to Cathie in her portfolio. we are getting it 42% off. And Cathie has been hurt by this stock, right? And it's one of her largest positions, where it's 3.47%. Now she is widely diversified, considering her largest holding is only 6.5% combined. Let's check just ARKK. Yeah, it's a little more hefty here, 5.4. So still somewhat big, but considering she's very diversified, it doesn't hurt her too much. But just a lot of money gone in this one stock, and the stock's been falling ever since, just in like 2 months ago, right? Let's check 3 months. Just in the last 3 months, Zoom is down 34%. Now let's look at the technical side of things. RSI looking pretty good here, not confirmed yet because the blue line hasn't crossed over the orange, the MACD, but the momentum is weakening, and that just makes it easier for the green to start to turn up here soon. RSI is just above that 30 mark now. It was below a little bit, 23 or so, but now back above 30, just barely. Past 4, you can see, has not disappointed any earnings on here, which is a relatively good sign compared to like Teladoc Health, which would disappoint investors more times than not. So Zoom looks pretty good here. Same thing. You want to start position, maybe buy a couple of shares, see what happens to them. If they continue to dump, then you could watch a previous video where we talked about setting up a trade stop loss, where if you buy right here, you could sell, create a stop loss percentage for yourself. 17 is pretty steep, so we could even bump that up a little bit. But you want to set a stop loss for any trade, no matter who's holding it, no matter who's buying it, just because you don't want to hold a bag, right? You don't want to buy at 190 for it to sit at 140 in a couple months. You want to buy at 190. If it goes to 180, you sell. If it does not and keeps to climb, you hold. That's the trading plan. That's what you want to set up. That's what Cathie should have done here, but I'm sure she knows more than me. But that's just her 3 stocks that she's down on. I hope this gives you a better view of what these stocks are doing, and if they're even good plays at this price. I'm sure a couple would look cheap now compared to a couple months from now. So I hope this video helped. If it did, please press the like button and subscribe for more videos. Thanks, and goodbye.